Well, risk trades might be back, but tariffs, earnings, and the Fed's rate policy, as we were still just discussing, could all derail markets. Our next guest says a lot of the good news is already priced into stocks, making further upside harder to come by, while high valuations mean high downside risks if earnings disappoint. Joining us now for more is Tom Hulick, CEO and managing partner at Strategy Asset Managers. Tom, to what degree do we need to think about international markets as a risk versus an opportunity? I know you like Mercado Libre.
We do, and thank you for having me on set today. And nice to be here. We like the international markets with the dollar depreciating against the foreign currencies. We see a tremendous advantage for some of the stocks that we've put our clients into. Mercado Libre is one of those, and that's an e-commerce company that also is very high into fintech.
Although it was trading down on some of the Brazil stuff, but it's Argentinian.
Well, Argentina is one of the benefits, the benefactors of it. There's a great turnaround story there from their country standpoint. But we really like this kind of stock because if you take a look at the advantages of the growth in Latin America, South America, it's far greater than we think in Europe at this time. So we like that.
And you mentioned top level, the weak dollar, which, I mean, look, this is one of the greatest quarters we will probably ever have for sheer dollar weakness. We were down 10%. What was it? 10% of the quarter was about half of that.
Right.
And it was 10% for the first half of the year.
Well, it benefits the United States to have the soft dollar from the trade policy. And if you think about it, the United States really is going to try to balance out the economic imbalance between tariffs and the taxes that are in place. But we're really set up to be in a very good position. We've been talking to our clients about how to look through the noise and try to advance beyond that and look confidently down the future. We think that there's a very, very strong sign for a next generation bull market ahead of us.
But at a minimum, a weak dollar should help all international stocks, right?
Yes, it should.
Just literally in translation effects. If I'm holding, the currency goes up, makes the performance better in dollar terms and so on and so forth. So is that already priced in, or do you think that, look at the international performance we've seen elsewhere? Should we expect similar in the back half of this year or no?
I definitely think it's priced in. I think that the market's gotten a little bit ahead of itself at this point, and we're going to take a breather for some period of time. But the outlook is very, very positive going forward. A weak dollar is not going to harm the U.S. I think it's going to be a benefit for net exporters, and you can see that right now with the earnings reports.
Speaking of looking ahead, bringing it back closer to home and thinking about the Fed, we know what President Trump wants when it comes to a new Fed chair, somebody who's going to get rates lower. Now, there's more than just the chair to working that out. How much influence do you think the next Fed chair, who the president presumably is going to appoint, is going to have over the rest of the voting members? And how does that factor into your looking ahead and perhaps optimism for the markets next year?
Well, we've been talking to our clients about Fed rate cuts as early as July happening. However, we've pushed it out towards the end of the year for 2 rate cuts. Having said that, when you look at what the shadow Fed Reserve Chairman could be in place and dictating the terms of what's ahead of us, we all know that the deficit is way too high. We know that the rates have to come down eventually. When it's going to take place, we really don't know. But impacting on earnings, I think that the CEOs of the companies that we own have already priced that in. And as the market takes a breather, we'll catch up towards the end of the year.
Yeah, we talked about some of the international. You also like Lilly, which has not been a great stock lately.
You're right.
Kinder Morgan, I mean, again, the energy space. So just what are you still like the whole AI trade, the AI story. So what are some of your most high conviction places to be?
Well, I think health and healthcare is a very important sector to concentrate on. It specifically like biotechnology and pharmaceuticals. And although Lilly is kind of pulled back a little bit, they still represent a huge market with the GLP-1 drugs. And there are 1 billion people across the globe that are obese at this time that could benefit from it. And we're seeing additional indications that the GLP drugs can help with inflammation. And there are going to be all sorts of benefits from it down the road. And if you transfer that over to the pharma and the biotech area, I was just in Dubai a couple of days ago. We were talking about the next generation vaccines and personal cancer vaccines that are in front of us. It's an exciting time, and I think the stars are aligning for a huge advancement in biotech.
Looking at your top 5 holdings and looking at your picks, it doesn't seem to me like you're trying to pick the software winners in AI going forward. It looks like you're focused elsewhere. Is that a valuation issue? What would it take for you to say, okay, we're going to place some bets here, here, and here on how this plays out and who wins?
Well, we're an active manager. We've got 4 different portfolios, and the benefit of that is that it's what you own and what you don't own. That can really benefit the client going forward. So we've steered away from some of the tech names right now, and as the market broadens out, we're very, very comfortable with the tech names that we already own. Of course, the NVIDIAs, the Microsofts, but we also avoid some of the companies like the Apples right now. We're avoiding Tesla, and those are names that are commensurate with everybody's portfolio nowadays. But it's what we own and what we don't own that make a lot of sense.
Palantir?
Love Palantir. Okay. Great company.
All right. So not staying away entirely.
When did you get into Palantir?
Very early on.
How?
That's a story for the clients that we have. But we had an early option to go into the company, and we stayed with it, and we're benefiting from it. Because
there are people today who got this Palantir. It's a black box. No, what? That's why I'm so curious. Talk a little bit about what they're doing. Are there any others right now you feel really excited about too?
Well, defense, cybersecurity, national security, all at the forefront of the United States leading the world going forward. Palantir is at the forefront of that. We think it's a stock that you should own. We also own some of the defense names like Lockheed Martin. But there's some, as you know, everybody's going to try to catch up on the increasing their defense spending, and that's going to pour over into the defense names. But Palantir is a very good company to own right now.
And it's been a very good company. That's the thing. They go, well, yeah, I would have liked to get in 10 years ago. But I guess, I think about Netflix. This stock you could have bought it in January and be up 60%. Same with Palantir, right? And so you have no qualms with people getting into these stocks, some of these high flyers, now at this point of the game. Well,
we have had conversations with our clients to kind of quell the volatility, question that's out there. And I think they've become more educated along the way. You have to own technology. It's one of the largest sectors of the S&P. But it's what you own and who you own that makes a difference. And as I've said before, we like some of the certain names, and we will overweight in those names, as we just mentioned. But the market is broadening out, and that's benefiting our clients. The utility sector, who would have thought that the utility sector turned in? But power, energy, very important right now. Benefactors, utility companies, nuclear. We like NLR. Which is an ETF in the space of energy, uranium.
Interesting.
So
uranium guy too.
All right.
You seem low key, Tom, but you're in all the hot stuff.
Yeah, it was just in Dubai.
There's just so much optimism out there on our side, and I think it's going to be a great decade for investors. And as you've reported before. Technology is going to lead the way, but we're going to see some advancements that are going to just blow everybody's mind over the next decade. So we're pretty excited about it.
All right. Tom, thanks. Tom Hulick.
Thank you very much.